All right, welcome to my YouTube channel. My name is DF Basy. If you're new to my YouTube channel, please kindly like and subscribe, and also share the video to friends and people who you know might need are into trading and might need this information. Right. So without further ado, today I will show you how to understand market structure. So as a beginner trader or as an advanced trader, market structure is critical in any strategy you're trading or while doing your analysis. You need to understand market structure. You need to understand the basics of market structure. You need to understand how market moves in real time with market structure, and with understanding these basic informations can give you an edge in executing good trades, high probability setups, and taking good trades and having good risks to reward and making profits in the market. So the basis of the market moves in a structure, right? From everything we see here, all this price action we see here, market moves in a structure. And if you fail to understand this structure, you likely make losses and won't make profits. You likely make a lot of losses. Why? Because market structure is the basics of market dynamics and market movement. So without further ado, let's go straight into the video. So now, market structure is basically, like I explained, is simply how the market moves, right? How the market, be it in crypto, operate, be it in Forex or in stocks or whatever you're trading, futures, bonds, how the market moves. So now, in market structure is the price movement of the market, showing the structures in which the pattern which it moves, right? So now in market structure, we have two types of structure. We have the bullish structure, we have the bullish structure, then we have the bearish structure. All right. So now in this is the bullish structure, this is the bullish market structure, and this is the bearish market structure over here. So let me write that out. Structure. This is a bullish market structure, and then we have the bearish market structure. Okay. So now let me explain why this is a bearish market structure and why this is a bullish market structure. So now in a bullish market structure, what do we see in a bullish market structure? We see market creating series of what? Higher highs, higher highs and what? Higher lows. So I'm going straight from the basics down to the advanced. You have the higher lows and higher highs, right? You have higher low here, then you have a higher high. Then you have, hold on, you have another higher high, you have another higher low over here. So in a bullish market structure, what does market create? Creates higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, while doing what? Breaking structure. Excuse me, sorry. While breaking structure to the upside. Now, this is what we call a break of structure. This is what we call a break of structure. This is what we call break of structure. Now, what is a break of structure? In a bullish market, a break of structure is when market takes out a higher high, closes above that higher high, and retraces. That's a break of structure. So market is taking out this higher high, right? Taking out this higher high here and closing above it. While in a bearish structure, in the bearish market structure, which is over here, what do we see? What happens in the bearish market structure? We have lower lows, right? We have a lower low. This is a lower low. This is a lower low. This is a lower low. Market creates series of lower lows and creates series of what? Lower highs. This is a lower high. This is a lower high. And this is a lower high. So while market is creating this lower low, lower high, lower low, lower high, lower low, lower high, what's market doing? Market is also breaking structure to the trend, following the downward movement, breaking structure to the trend. You know, in the bullish structure, breaking structure upward, following the uptrend, the bullish trend, breaking structure to the upside, breaking structure to the upside. Now, in this trend, the bearish trend, because the bearish trend, breaking structure to the downside, which is here. They have a break of structure there. You have a break of structure here. They have a break of structure here. They have break of structures to the downside. So this is the basic market structure concept. So now if you can understand this, you can understand how the market moves. So this is how in ideology, this is how it moves. But in real time, this is how the market structure moves. Let me show you how it moves in real time. I'm still gonna draw it out for you. Just looking for a room. All right. So in real time, this is how market structure moves. It moves like this. All right. Are you with me? Hope you're with me. Okay. Trying to put this up in a way that actually represents what we see in the market, what you see in the market day to day. Right. Okay. Now, in real time, this is what happens in the market. This is how the market structure is. So now, what will I take this as? I'll take this as what? A bullish market structure. Take this as a bullish market structure. Let me clone this. There's a way I can flip this. Okay, there's no way I can flip that. Okay, so I'll take this as a what? A bullish market structure. It's a bullish market structure, okay? So let me say bullish MS market structure. Then you have a bearish market structure over here. That it is plenty of room here. You have this, 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 this. Okay, so this is all right. So this is a bearish market structure. I get a bit advanced now from what I showed you guys. So this bearish MS, bearish market structure. So now this is a bullish market structure. So now it's different from what I showed you here. So over here, what you see in the market is simple. This is the Bible version of uh market structure. Bible version of market structure in the sense that market breaks higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, breaking structure to the upside. For a downtrend, bearish market structure, you have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. The market is breaking structure to the downside, while on the uptrend, market is breaking structure to the upside. So now in this bullish market structure, it's not as clear as what I drew there because in the real market, it won't be clear like that. But one thing is for sure, one thing you see for sure is market to do one thing to identify the bullish market structure. Do you understand? Market will always do one thing to identify the bullish market structure. And what is that one thing? Market, number one, market will always break structure following the trend. The market also always creates the highs and the lows according to the trend. Follow me. Market will always break structure according to the trend, number one, and market will only always create highs and lows according to the trend. So let me type that out as a rule. Rule number one, market will always, let me write BS as break structure. Break structure following the trend. Number two, market will always create highs and low for the trend of, let's say, according to the trend. According to the trend. So now let's read this rule. Read out this rule. Market will always do what? Rule number one, market will always break structure following the trend. Market will always create highs and lows according to the trend. So you are following this rule now. If you're caught in a situation where you have this type of market structure, how do you identify if this is a bullish market structure? Like I've told you guys already bullish market structure, but how do you identify if this is a bullish market structure or is a bearish structure? So following this rule, market will always break structure following the trend. If you look at this, where is market breaking structure? Where is market breaking structure? I feel number one rule, number two rule should come before number one, right? Let me flip this. Let me flip this upside down. Sorry. Feel number two rules should come before number one. All right. So we are starting from top to down now. So, so permit me. Number one rule, market will always create highs and lows. So once market creates highs and lows, how do you identify your highs and lows? So for me, if I'm looking at this trend, this is a low because this is a low, right? This is the low. This should be a high. This is a high because market created a high, came back, created a low, created another high, came back, created a low, created another high, came back, created a low, created another high over here, right? So I'll take this as what? This as my low. Then I'll take this as what? My high, right? So now if market is creating a high, a low, a high, a low, a high, a low, a high. So that means indirectly it's creating what? A higher high. It's creating a higher high and a what? A higher low. So with this, I've identified the market is creating higher highs, higher lows, higher highs, higher lows. So this is a higher low, this is a higher low over here. Then what do we have here again? We have a higher high over here. Then we have the last higher high, right? We have the last higher high over there. So now we have been able to identify the highs and the lows. Remember in the rule, we said market will always create highs and lows according to the trend. So it has created highs and lows, highs and lows. right? We have identified that and identified higher high, higher low, higher high, higher low, higher high, and higher low. So with all of this, right? We know, okay, with this, we know this market is bullish, but to solidify the belief that this market is bullish, right? We need to see market break structure following the trend. The rule number two, market will always break structure. BS, it means break structure, following the trend. Right? Let me just write it in full, break structure, so that some of you might break structure. Break structure following the trend. So now, where is market breaking structure? You can see now, if you look closely, this high that was here, this higher high, market took it out. So once market, remember I told you guys, once market breaks above a high in a bullish in a trend and closes above it, it comes back, create another higher high, higher low, then creates a higher high, break, keep on breaking structure to the upside is a bullish market. So you can see here, market did this. You have this break of structure here. You have that break of structure to the upside. You have market taking out this higher high, breaking structure to the upside. You have market taking out this higher high, breaking structure to the upside. Can you see? So with this now, I can solidify that now this trend is bullish. So now in a bullish trend, what should you be looking at? You should be looking at buys on the safe side. To be looking at if you understand the market structure, you've been able to identify because most traders they might think they might have identified the market structure, but they haven't identified the correct market structure. Or most times they identify the market structure late before like identifying the market structure late, and at the point where they identify the market structure, market is trying to change the structure to a bearish one. So they are stuck on a personal bias, right? They're stuck on the personal bias of the market. Whereas market is trying to change to a bearish structure and starts a bearish momentum and a bearish structure, and then they're still looking for buys, and market keeps hitting their SL and they'll keep shouting, why am I losing money? Why? Is because you have identified the market structure late, right? And once the market structure started moving in the opposite direction, you haven't been able to identify when the market reverses, it changes trend. So if you check my channel, you see there's a video I did on that trying to identify when market changes a trend and all. So, but I also put more light on that. So now we have identified that this is a bullish market structure. So now if you wanted to take trades on this guy, we're looking for buys. And where we'll be looking for those buys? We're looking for buys at the bullish order blocks, which is somewhere here. This is here at the higher lows, and this is here. So what we'll be looking for? We'll be looking for buys to target where? To target the higher high that it kept, to break it. Then you keep your SL what below the block, right? So this is what I'll be looking for to do. Taking these buys, taking these buys, I'll be taking buys here. So in a bullish market structure, what should you be looking for? You should be looking for buys. Stop trading against the trend. Stop looking for sells when the market structure is bullish. It will only lead to losses. I'm telling you, you make a lot of losses. You lose money. Follow the trend. As retail traders, we are meant to follow the trend. Trading against the trend is it's not profitable in the long run. For me, it's very, except you're a scalper, but inside scalpers trading and counter trend, inside that trend, they are seeing a different trend, substructures, which is now internal structures. I'll explain that. So now, what can you see? What's the difference between what you see here and what I showed you here below? The difference is here, market created what I said called internal structures. You can see like here, as market was selling down, as created a higher high and is moving down to the higher low, create a higher low. This move here, what the market do? Market, what the market do? Market created a substructure inside here. So now this substructure, what does it look like? It looks like a berry structure. It's a berry structure. So while people have taken the buys from here, to take sales here to close their trades and take out the sales. Market will now, since people are many people that took their buy options here, the buy trade and taking sales here to close their profit, lock in, secure their profit. Market will then start creating sell structure because of that momentum. So you now start seeing break of structure to the downside on, let's say if this is a 4 hour time frame, you start seeing these structures on 30 minutes or 1 hour, break of structures to the downside, correcting back to this move, to this higher low to buy from there. Do you understand? Now, I failed to say something before progressing. Now, in market structure, we have two moves, right? Let me go back here. In market structure, we have two moves. We have the corrective move and we have the impulsive move. So now, in the corrective move is the move that creates internal structures, correcting uh, the trend back to the other block, to the POI, while an impulsive move is a move that a swing move that follows the trend, that pushes markets according to the trend. So now, where is a corrective move? This is a corrective move. That is a corrective move. And hold on. That is a corrective move. And where is an impulsive move? This is an impulsive move. Do you understand? This is a corrective move. This is an impulsive move. This is a corrective move. And this is an impulsive move. So this impulsive move right here, this impulsive move, this is a move pushing the market according, like following the trends, the swing structure. This is a trend, this is the move that breaks structure. So now this is an impulsive move. This is the move following the trend that is breaking structure. So this is an impulsive move, and this is a corrective move, correcting the structure, creating a correction down to this other block for another impulsive move to buy up. So do you understand that? So in a bearish move, it's the same thing. So the impulsive move is that which is pushing market in the direction of the market of the trend where you have identified. So now, if this is a, like we have identified, this is a bearish trend. So now the impulsive move is the one that's pushing market downwards. This is the positive move. This is the impulsive move. That's an impulsive move. This is an impulsive move. The impulsive move always breaks structure to the downside. This is an impulsive move. And this is another impulsive move, breaking structure to the downside. Now, look at this. Where is the corrective move? This is the corrective move. That is the corrective move. Where? That is the corrective move. See that leg? That's the corrective move. Where is the corrective move? See this guy pushing market up against the trend. It's the corrective move. So with that, you understand the impulsive and the corrective move, right? It's basically you have the impulsive, in the market structure is made up of impulsive move and corrective. They have the corrective and the impulsive move. So now coming back here, this is what happens. This is how market structure looks like. But in real market time, this is how it looks like. In real price time, this is what it looks like here. So most times, beginner traders will be like, I saw this on the textbook, or I saw this on the PDF, but going loading my chart, it looks very, very different. This is why it looks very, very different. This is how it looks like in real market time. Well, so what I was saying here, this is a corrective move. This guy is a corrective move. This guy here is a corrective move, right? This guy over here. So this is a corrective move. That guy too is a corrective move. That guy is a corrective move. Where do you have your impulsive move? You have your impulsive, in this bullish structure, you have your impulsive, this is your impulsive move from here to here. That's your impulsive move. You're looking for impulsive move. This is your impulsive move from here to here. That's your impulsive move. You're looking for your impulsive move. This, can you see it? That is basically your impulsive move. Okay. Well, that's like to be visible. So that is your impulsive move. You're looking for your impulsive move. This is your impulsive move from here to here. That swing structure, this swing. So that is the impulsive move. This is the corrective move. So in the corrective move, you see substructures. So this is a bullish trend. In the corrective move, it's coming down to the other block to buy from there to create a higher low, then buy from there to create a higher break structure to the upside to create a higher high. So while it's coming down, you see these substructures, and these substructures will now will form a bearish structure, a bearish structure. So that's where most people traders get it wrong. You see these substructures and feel like, oh, okay, market is bearish here, so looking for sales. But now they'll sell from, let's say, for instance, let's take it that now inside the structure, they now sold, someone sold from where? From here. Okay, this is this other block that broke structure to the downside. So he marks out the other block, and what is he looking for? He's looking for sales. Once he takes this sell, what happened? Market hits his SL. Market didn't even go his direction. Market triggers hits SL and continues the overall trend. So it's important to understand market structure, understand overall trend of the market before taking a trade or before building a strategy. Because in every strategy, trading strategy, you need to understand this as a basic first. You need to understand how market structure plays out. So now that's a bullish market structure. In this market structure, a bearish market structure, how to identify if this is a bearish market structure? In a bearish market structure, what do you have? You have higher lows, sorry, you have lower lows and lower highs. So with our rule, which I told you, market will create highs and lows. So where is my high? Where is my low? This is my high. This is my high. And this is my what? This is my low. Right? This is my high. This is my low. So now from this, I'm seeing higher lows and lower lows, higher lows and lower lows. So from there, I can mark out this is my higher low, this is my lower, higher low, sorry, higher low, and this is my what, lower low. That's my lower low. So with that, I can say that, oh, this market is what is bearish. It's a bearish trend, lower low, and this is the lower low here. And this is the higher low, is another higher low, and this is another higher low over here, right? So with this, what can you see? Market is doing what? The second row, market break structure. We have to break structure following the trend. So what do we see? Market is breaking structure to the downside, breaking the lower lows to the downside, breaking the lower lows to the downside. Now, how do you identify that? With that, you can say, oh, this is breaking structure to the down low, breaking the lower lows. We can call this a what? A bearish trend. You have a BOS to the downside. You have a BOS, break structure to the downside. Have a BOS here to the downside. So that's how you identify a bearish market structure. But in all of this, what will you still see? You see where is your impulsive move? This is your impulsive move. This is the impulsive move. A move breaking structure to the downside. This is the impulsive move. The move breaking structure to the downside. This is the impulsive move. The move breaking structure to the downside. Right? That's are your impulsive moves. Then where is your corrective move? Your corrective move is the move correcting the trend, right? The corrective move is the move correcting the trend. So in this corrective move, you see more of like a bullish structure inside. This is it. This is your corrective move. Small internal structures. That's your corrective move. And that is your corrective move. So if you can basically understand this and know how to understand and understand the market structure, you can trade easily you can have you to increase your edge and your win rate, and you'll be able to take good A plus setups. So, as a trader, I was speculating price. So if I was to sell, if I see this is a bearish market structure, I should be looking for sales, right? After I define the trend, where would I be looking for sales? I'm looking for sales at these blocks, these other blocks. So I'll be taking sales here to break structure to the downside from here, taking a sell from here to break structure to what? To the downside, to take out this lower low, targeting that lower low. So I'll be doing the same thing here, doing the same thing here to target what? The lower low. My stop loss above the other block. Same thing here, right? So with that, we understanding this market structure, you can trade the market. So let's go to real charts, the time charts. Can you see how it is? This is how it looks like in the real market, but this is the Bible version of it. What I showed you here is the Bible version of what we know as market structure. So without further ado, remember our key rule. Let me take out our rule so that I want to clean it up. So I want to clear out all of this. Okay, hold on. Sorry, trying to clear out all of this so that I can have room to do proper analysis. Okay, so we have room to do a proper analysis. So now this is the GBP NZD trade. Yeah, this is a GBP NZD chart. So now I'm going to do this on the 1 hour. So now you can see, what do we have here? We have a what? A bullish market structure. Why? Because why I can see market creating this. I'm first off, okay, let's start from the row. Identify the low. This is the low. This is the low I can see. I can see a low. Then I can see what a high here. I see a high. So that's a low, that's a high. So in this trend, in this market, what do we see market do? See market creates a series of higher highs, higher lows, higher highs, higher lows, and higher highs. Can you see how it looks in the real market? So you have the higher high, then you have the what? The higher low. So you have this, the higher high, you have this, the higher low. Then what do you see? Market keeps breaking structure to what? The what? The upside. Remember, after creating it, you create highs and lows according to a trend. Then what next? What should market also do? Market should break structure to following the trend. So it's breaking structure to the upside, breaking the highs, taking out the highs. So with this, we can say we have a bullish market structure here. We have a very clean bullish market structure here. So in this bullish market structure, what should you be looking at? You should be looking at buys. It's a break, sorry, it's a break of structure, BOS. This BOS, and so most of you know that already. So this is also a BOS. So what you'll be looking for, you'll be looking for buys at other blocks. So where would I be taking a buy? I would have taken a buy here from this block, taking entry using candlestick as a confirmation. Look for a confirmation there, then take the buys to break the structure to the upside. Can you see TP hit, overall TP hit? Now here, over here, market didn't come back to this block. Just it didn't buy from there. But if you look closely, there's a block here which market respected. From this block, market also swept liquidity. There's liquidity here, swept the liquidity, and then you have market moving to the upside from there. But from that block to there, you can also take a buy. Target 1:3. TP hit. Now, where else will I be looking for buys over here? I'm looking for buys on this block. Looking for potential buys. So what will I be expecting? The market didn't come back to mitigate, but market has mitigated this block here. What would I be looking for? I'm looking for market to come back down here as it has broke structure. I'm looking for market to come back down here. Tap this block, then buy. So there, I'll just keep what I'll do is here. After understanding, there are other things you need to understand in the market, the how to do your multi-time frame analysis and understanding the structures, which I've showed you here on the multi-time frame analysis, breaking down to the 1 hour, 4 hours before you place this trade. I'm looking for this. This is what I'm looking for. Simple, understanding simple market structure. So now let me go to another chart, a bearish chart. Let me go to NZD USD. So now in NZD USD, is it NZD USD? Yeah, I don't think it's NZD USD. Let me check. Odd USD. I'm looking for a very clean bearish structure. Structure is not clean. GBP USD. Oh, oh, yeah. Hold on, I'm looking for perfect. I saw there's a pair I saw that was bearish. I think it's okay, let me go with this. The NZD USD. I think it will do the trick. So now NZD USD, what do we have? Okay, it's bearish. It's bearish. I'm looking for something more subtle. And let me break to the 30 minutes time frame. So I'll give a clear picture of what we are looking for. I think it was GBP card. I'm looking for something that's a clean, very structure so that you can. Okay, this is it. So now, what are we focusing on? We're focusing on. I want to show you how the base structure looks like. So now this is it. This is a bearish structure. So what do you see? If you see market breaking structure to the downside, break a structure to the downside, break a structure to the downside, break a structure to the downside, right? You can see this is a bearish structure. Then this break, yeah. So we have these other substructures here. Break a structure to the downside, break a structure to the downside, break a structure to the downside, and break a structure to the downside. Now, with all of this, where would you be looking for sales? You'd be looking for sales at potential order blocks like this block here. Looking at sales from this block, sorry, this block there. We're looking at sales still here at this block. Then to be looking for sales at this block before market changed and it's now bullish. So now here on this, where would you be looking for sales? And the block, where will you set your limit? You set your limit on the block, on that block. Take your sell, SL above the block. Target, what are you targeting? You're targeting the break of structure, the next break of structure. Same thing here too. Where are you targeting? The next break of structure. Unfortunately, market didn't break structure in this trade, but at least it did a good move, whereby if you're targeting one is to three from here, targeting one is to three should have been out by now. You understand? Gave bit. So if you break down to 15 minutes, you see good order blocks to enter from. But I don't want to break that because I'm trying to make this video as short as possible. So with this, remember we have to identify some things, specific things. Identify the low and the high, because market will always create lows and highs following the trend of the market. So where's the low? Where's the high? So this is my high. That's my high. And where is my low? This is my low. So with this now, I can see that, okay, market is creating what? Lower lows and higher lows, higher lows. And with this, I can say, okay, with lower lows and higher lows, what we see, we're seeing break of structure to the downside, taking out the lower lows. You have a break of structure. So with this, I can conclude that, oh, this trend is bearish. And in the bearish trend, what we should be looking for is sales. So do you understand how this market works? And now, this is where do you find your impulsive move? This is your impulsive move. This is the move breaking structure to the downside. Then where do you have your corrective move? This is your corrective move. See your corrective move. That is your corrective move. See your corrective move. This is your corrective move. Now, if you go back to GBP NZD, GBP NZD, what do we have? I want to show you your corrective move and the impulsive move. So now this is GBP NZD. So what do we have here? You have your impulsive move. Taking this is the impulsive move. Impulsive move. What do you have? That's the impulsive move. You other have another impulsive move here. Because this is the move. Explain how impulsive move, the move breaking structure to the upside. That's the impulsive move. Then you have another impulsive move here. The move that broke structure. So now outside is where do you have your corrective move? Now, let me create space. This is your corrective move. This is your corrective move. This is your corrective move. Right? This is your corrective move over here. You get me? It's clean. It's clean. It's easy. Let me move to NAS 100 and think. Okay, let me use this. So on the NAS 100, you can see we identify this, we can identify that this guy is bearish. So now you can see your impulsive move. This is a clean impulsive bearish move. This is your impulsive move to the downside, breaking structure to the downside. This is another impulsive move, breaking structure to the downside. This is another impulsive move, breaking structure. There will be a next impulsive move, breaking structure to the downside if market doesn't change trend. Do you understand? Then where do you have your corrective move? This from here to here is the corrective move. That's why counter trading is not really a nice thing. That's why I've told you guys to be profitable in the long run. Avoid counter. This is your corrective move, right? So if you understand the market structure better, you take better trades. Like here, cut this sell from here, catch the sell. Where you targeting market to break structure to the downside, breaking the lower low. And this TP hit, you've made huge profits from here. There's another block here. You look closely, there's another block there. What are you looking for? Sales to break structure to what? The downside, breaking the lower low. So you'll be profitable in the long run. So that's why I say it's safer to trade according to the trend. Do you understand? It's safer to trade according to the trend. So with this, I've been able to explain and show you how to understand market structure and understand bullish and market structure, how it looks like in real market time, the rules you need to look at for to understand and conclude if your market structure is bullish or bearish. So with this, I know that your edge will increase. You have more understanding of the market and you make more profits. So remember to study hard and trade easy. The more you study hard, the more all this looks easy to you and you'll be able to identify and understand all these terms which I've been saying or what I've showed you. Right. So if you're new to my YouTube channel, please kindly click the subscribe button and like the video, and please also share the video to your friends and whoever you know are into the trading space. All right. I'm DF Basy and see you in the next video. Remember, keep learning, never stop learning, and keep evolving. never stop evolving.